In this video, I'm going to share with you how to grow a small account into a big account within a short period of time. So for example, let's say that you have a $10 account and you want to grow this $10 account. Let me show you how you can be able to do this perfectly, right? So first you start up with a lot size. You want to, if you have a $10 account, the best and lot size you can use possibly to lower the risk on the market is 0.2 lot size. That's the best lot size you can use. Okay, so use 0.2, and for this 0.2 lot size, the profit you are going to be making, if for each candle tick you successfully got, is 10 cents, which is 0.10. okay, that's what you are going to be making for every candle tick, which is this green. If once this one is fully created, then it broke out, you have gotten about 10 cents as profit. So I'm going to share with you how you'll be able to be getting 5 each for every entry you have made, and you'll be able to make profits. And you know that if you successfully got about 5, that's about 50 cents, right? 0.50 cent. And if you got 10, that's $1. Okay, so if you successfully got 5 candle ticks successfully, you have gotten 5 cents. Then if you multiply that by 2, that's about $1 you have made from that market as that. All right, so what we're going to do right here, what you are going to do as the trader who have a smaller account, is to first of all set your lot size. Okay, then when you have set your lot size, then you enter into the market and you observe. First thing you want to do is to always observe the market condition, how the market is and how the market have been doing. Okay, now we're going to go back to the historical trend right here and look how the market have been doing for the past few days. So we're seeing that the market have been selling from here. The market have been selling, as you can see, a continuous sell, then it bought. You can see there's a high sell in this market. So this market have started to buy right now. So first of all, we're going to go over to the 1 hour time frame. Go to the 1 hour time frame right here and we'll observe as well. So the 1 hour time frame, the market have sold for a very long period of time. So now the market to buy. Okay, but we also need to confirm where this market is going. If the market is going towards the downside for a long period of time, this is what we put in the average movement, the moving average period indicator right here. Okay, the moving average indicator right here. So the moving average now is telling us that this market is going towards the side. Okay, let me show you with this object line. The moving average, you can see that it's going towards this line right here, as you can see. But this market would sell and it will buy, it will sell, just following that same pattern again. All right, now that we have confirmed that, we can see now the market is buying. So what we do is we are going to be scalping this market on the 1 minute time frame. Okay, this is the 1 minute time frame you want to be scalping this market for, to the 1 minute time frame, and you observe. Now you wait until the spike comes into this market first before you place an entry, because right now on the 1 minute time frame, the market have bought for a very long period of time and the market is supposed to sell. Okay, the market is supposed to sell before we enter into the trade, so that we don't end up blowing that small $10 we have on that market. So I'm going to share with you a strategy that you can use to multiply your earnings on this crash market and grow your smaller account. You put on the RSI on indicator window 1, the relative strength index. Use that to level the trade using these parameters right here. Period 14, levels 90 and 10, just as you can see right here. You remove this cell, you don't add the sell and the buy. The style, 4 pixels color black, just like that. The style right here, color white on 1 pixels. Okay, use the RSI, then you put on, you look for another good indicator you can use as well. So we'll look for the MACD indicator right here. Fast EMA 14, slow EMA 24, MACD SMA 10, just like that. The main color black, 4 pixels, the signal red, 4 pixels. All right, so the spike have not come in yet into the market, but we can see that this MACD just got to this level of 90. I thought I removed this sell from the RSI. Don't know why it's still there. Okay, just let's leave it. You can see at this point right here, the MACD got to the level of 90 while expecting a sell. Okay, so the market would sell from that point in time. So what we're going to do also is to put in another indicator on the indicator window 1, which is the, let's put in the stochastic oscillator. Let's see what we can do with that. All right, the stochastic oscillator on the K period 30, D period 3, slow in 3 as well. The price feed slow and high, just as you can see right here. Then you put in the levels for 90, 10, and 50. Okay, just as you can see right here. The main color I use green on 2 pixels. The signal I use red on 2 pixels. Then on the stochastic oscillator, when this line, which is this green and this red, when they cross the overbought and you see only just one line pattern going straight forwards, this means that the market will continue to buy for a certain amount of time before the spike would come. Just as you can see right here, the MACD started to buy for a very long period of time. You can see the MACD showing an upward trend for a very long period of time before the spike would come. Okay, and let me show you again that when there was a spike right here, it curved down. It was supposed to break down. The spike was supposed to come, a very long spike was supposed to come at this point, but it didn't come, and it went upwards again, showing you that straight line pattern. So this means that this market will continue to buy for a certain amount of time before the spike would come. Okay, so that's why I say that you should wait for the spike to come before you place a buy, because we're scalping this market, taking a buy. All right, so you wait for a certain amount of time. If you take a look at this point right here as well, when the stochastic oscillator passed the overbought level, you saw only a red line, and when you see a red line going straight forward, you know that this market will continue to buy for a certain amount of time before the market would sell. All right, you can see at this point right here, it broke down, and when it broke down, this green line touched this black line right here, which is the MACD line, right? It touched the line and there was a spike right there. Okay, the line came down together with the spike, right? But it only happened when the MACD got to this point as well. All right, you see when the MACD got to this point. And also, if the MACD on the early stage of the MACD is showing you an upward trend, if it gets to this level of 90 right here, the market may continue to buy for a certain amount of time, and this MACD will start showing you that it's going downwards like this. I hope you understand what I'm saying. So when you're scalping this market to grow your smaller account, you want to make sure that you follow the same pattern and strategy over and over again for you to be able to multiply your earnings in this type of market. Because if you do not follow that same pattern and strategy, you will not be able to grow that small account. And when you're trading with this type of style, you want to make sure that you are able to follow that 5, you stick to that 5 candlesticks pattern, taking just 5 after 5, and you want to have patience. You want to make sure that you have patience in this type of market to be able to grow that account, because there will be an instance whereby the market would sell, and it may end up taking away some of your capital or some of your profits. And you should not give up. You should also always know that your strategy will work for you. Okay, you should always know that your strategy would work for you, as you can see. And at this point right here, when the MACD got to this point, you saw that there was a spike at this point as well. All right, there was a spike right here. It got to this point, and the stochastic oscillator curved downwards. It curved downwards, as you can see. That was a spike right there. So all you wait for the MACD to get to this point, and the spike would come in if you want to catch the spike as well. And for a possible buy entry, you place a buy immediately the MACD starts creating an upward trend. You want to wait for the spike. You want to make sure that the spike that comes into the market there was multiple spike. Let's say there was multiple spike, or if the spike was long that come in to the market, then the first MACD you place a buy to scalp your 5 candlesticks and you're out of the market. Okay, for instance, you saw that there was three spikes right here, 1 2 3, right, towards the downward trend of the MACD, and this was the first upward trend of the MACD. So at this point right here, after 3 spike right here, you place your buy. You count your 5 candle, 1, 2, 3, 4, 5, and you're out of the market. This fifth one, after the fifth one, the spike came through. Okay, so if you want to be so accurate on the market, you should take that buy after there's a long spike towards the downward trend of the MACD. When there's a long spike, then you place your buy immediately, because it's gonna be, rare for another spike to come into the market at that point in time. Okay, just as you saw here, look at it here. There's a very long spike. At this point, the market bought, but another spike came through. Okay, if you take a look at this point right here, this was still an upward trend of the MACD, but this was a downward trend. So this basically means that during the downward trend, when you see a long spike, after that long spike, you place your buy. Okay, you place your buy. This spike is not long enough for you to place a buy. This one is not long enough for you to place a buy. But if you are into the market, let's say you just open your trading chart and you enter the market right now, and you saw that there were 3 lines of sales and 3 of sales. There are 3 lines of sales. Then you place your buy because the market have sold for a considerable amount of sales, right? If you combine these 3 sales, it's going to be very long, right? It's going to be long. Then you place your buy, take your 5 candlesticks, and you're out of the market. Just as you can see right there, this is the downward trend of the MACD from this point here up to this point right there, and you place your buy for 5 candlesticks. But it's mostly advisable to place the buy towards the upward trend of the MACD. That way the spikes does not come into the market often at that point. Okay, the spike does not come to the market, so you wait until the MACD starts creating an upward trend. Then you place your buy for 5 candlesticks. 1, 2, 3, 4, 5. Here is the 5th one, and there was a spike at this point. After here, there was a spike. This spacing you are seeing here now, there was a spike at this point. There was a spike. This spacing, there was a spike. So let me show you what I'm talking about. From here now, you count your 5 candlesticks. Immediately from this point here, this is an upward trend of the MACD here. You start counting from here, you count 1 to 5, and you're out of the market. During the first MACD, after the MACD have created a downward trend, and you want to make sure that downward trend of the MACD, there was a long spike. Okay, you want to make sure that there was a long spike. If you see if a first spike was long, the second spike was long, then you are okay to enter the market for a buy when the MACD start creating an upward trend. Remember, it's going to be the first MACD, the first one. Okay, this is the first MACD towards the upward trend. This is the second MACD towards the upward trend. You want to place your buy only the first one, which is this one. Okay, if you take a look at this point, when the MACD starts creating an upward trend, no spike, only where you get a level of 90. When you place your buy and you see that the MACD has gone to the level of 90, you exit and take your profit from that point in time to avoid the spikes. 1, 2, 3, 4, 5. You can see how accurate it is. This is an upward trend. 1, 2, 3, 4, 5. There was a spike after the 5th one. So you see why it's good to always take 5 successful candlesticks for each entry, so that you'll be able to grow that smaller account. Okay, that smaller account. 1, 2, 3, 4, and the 5th one, there was a spike. There was a spike at this point in time. So you can see that this strategy is accurate, but sometimes they may be not too accurate for 5 candlesticks. So you can take 5, you can take 4, however you want to trade. But you can see that during the first MACD, towards the upward trend, is mostly, accurate. Even here is still 4 as well. All right, you can see. So when you're following the same type of trading strategy over and over again, placing the same entry for each entry for a buy, you tend to grow that small account into a big account. And the reason why I said that you should use the smaller lot size, which is about 0.2, is because for the trading, there's always going to be some losses on the trade, right? There's going to be some losses on the trade, so that's what you should be prepared for. But when you're using that small lot size, you would tend to, not to blow your account, which is all your profit and your capital won't go away when you have a lower lot size. Okay, when you have a lower lot size, you're able to manage your capital very well, and that's a good, risk management technique with that lower lot size. So if you are able to get 5 successful candle ticks, that's 50 cents. Then another 5, that's about 0.50 as well, and that's $1 already for 10. All you need to do is just have patience until the first MACD start creating an upward trend. Then you place a buy for 5 candle ticks. You can even take just 4 candle ticks if you want to be even more, safer on the market. Okay, you can take 4 candle ticks as well, and with time you will be able to grow that small account into a big account. All right, so if you found value in this video, do well to like and subscribe to this channel, the Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next video.